Hi guys and welcome back to my YouTube channel. If you are new here, hi, my name's Eva and I'm a mortgage power planner. Now in today's video I want to discuss bridging finance and more importantly the advantages and disadvantages of it, as not many people are actually aware of what it is and how it actually works, as well as the actual uses for it, as once again people don't really know what situations would require them to use bridging finance. So make sure we watch until the end to actually find out, as I'll go over some typical scenarios where bridging finance could be a good solution. So let's jump right into the video. So firstly, let's actually explain what bridging finance is, as a lot of people don't actually know what the term stands for. So a bridging loan is a short-term loan secured on property or land and is used to bridge the gap until you've got long-term finance secured or the underlying property is actually sold. The key to bridging finance is to have an exit strategy in place at the outset. So whether that be to secure long-term finance, such as a mortgage, or selling the property, you need to know what that exit strategy is, as bridging finance is very short term in nature. And when I say short term, a typical bridging loan term varies between 1 to 24 months, but it's very rare that a bridging loan goes above 12 months. So let's talk about the advantages of using bridging finance and how it could potentially help you. So a bridging loan is typically a lot faster to arrange than a standard mortgage, as the money can often be in your bank account within days. The lending criteria is also a lot more flexible than your standard mortgages, especially surrounding the security, so the property or land that you're actually securing the loan on. So it's actually available on properties deemed uninhabitable by mainstream lenders, so without a working kitchen or bathroom, etc. They're also available on properties of non-standard construction. So what you'll find with a lot of mainstream lenders, if they get a sniff of non-standard construction, they run a mile. They don't like it. They don't like anything that's not standard. Whereas bridging finance specialists are able to lend on those type of properties on a short-term basis. Also, a bridging loan can be secured on all types of properties and on land with or without planning permission, which gives you a lot more flexibility. Additionally, some lenders will actually lend you up to 100% of the purchase price or of the value of that property, which can often help massively, especially if you've got further plans for that particular property. So for example, if it's uninhabitable, making it habitable, that extra money will definitely help. And the last advantage is the fact that the bridging loan can actually be secured on multiple properties. So it doesn't just have to be secured on that one property, it can be secured on multiple ones. So if you're lucky enough to own more than one property, you can actually use all of them as security to be able to borrow more against them. But all of this is of course subject to the exit strategy, so always bear that in mind. Now let's move on to the disadvantages, as with anything in life, this type of finance arrangement does carry certain disadvantages that you need to be made aware of. So the main one, and something I touched upon previously, is the fact that this is a short-term solution. So as I mentioned, a maximum of kind of 18 to 24 months. So you really need to have your exit plan, exit strategy in place and figured out before even applying for this type of finance. This type of lending is also a lot more expensive than your standard mortgages, as the interest is often calculated monthly. So despite the bridging loan rates being at an all-time low because of the base rate being so low, it is still a very expensive form of lending. Once again, as mentioned before, you need to have an exit strategy or plan in place, because the lender will ask you about it, and that is the main thing that will determine whether they will lend you the money or not. So typical exit strategies are either selling the property that you're borrowing against or refinancing on the longer term. This form of lending also carries high lending fees, so the product providers will often charge thousands of pounds. Advisor fees also tend to be a little bit higher on these types of products because it is a higher risk form of lending and it does need to be documented accordingly. So all in all, this form of lending does carry higher fees. And the final disadvantage is the fact that with it being such a specialist area of advice, some mortgage advisors out there won't actually be comfortable advising on bridging finance, and that's okay. What they should do in that instant is to pass you over to someone who can. The last thing you ever want to do is to be left left alone in trying to arrange this yourself, because you really need to understand the risks and what you're actually getting yourself into, the whole agreement. So definitely do your research on the advisor that you'll be using to make sure that they have dealt with bridging finance before and that they are able to actually advise on it. So now that we've discussed the advantages and the disadvantages, let's actually talk about kind of typical scenarios in which you would need or use bridging finance. So some of the most common ones are when you're buying a new property but your old property hasn't quite sold yet. A lot of the times you can use bridging finance to bridge the gap between the two transactions and then repay it once that property has sold. So it's definitely worth considering. Another very popular scenario, and I've actually mentioned this in my previous video talking about buying auction, is to use it for auction purchases, as they do carry very short completion deadlines, so obtaining a mainstream mortgage may just take too long. So bridging finance can be a very good way of once again bridging that gap and then refinancing with a mainstream lender. Another reason could be that you're actually purchasing the property under market value but you're needing to complete very, very quickly. As with the previous example, certain mainstream lenders can take weeks to complete on a mortgage, which isn't what you need when you're looking to buy at a discounted value. When there's a good deal around, you don't want to miss it. So with bridging finance, it's almost as if you were a cash buyer because you're able to get the money a lot faster. Another scenario in which people use it is to actually help with cash flow through releasing some money out of the property. So that could be to pay a tax bill, to pay a divorce settlement, or even business use. A lot of people do use bridging finance to release money for business use, as that this isn't just a residential product, you can use it on commercial basis as well. And the last scenario I want to discuss is when you're buying a property that's deemed unmortgageable by the lender, that's deemed uninhabitable because it either doesn't have a working kitchen, bathroom, etc. It's one that you're basically wanting to develop and then probably sell on or remortgage with a mainstream lender. Once again, with this type of purchase, you'll probably struggle getting a mainstream lender on board from day one because of the property not being deemed mortgageable and therefore a very risky security asset to have. However, a bridging finance specialist won't mind that because they know what your plans are with the property, and with the short-term nature of the loan, they know that that loan will be repaid within months. So they're a lot more relaxed about the lending criteria surrounding properties, which I guess makes our lives easier. So that is it for today's video, guys. Once again, I hope you managed to learn something new, and I hope I've given you a bit of inspiration that just because a mainstream lender has said no, that doesn't mean that you have to miss out on the property that you've wanted to buy. Now, as with most of my videos, I would highly urge you to consult an independent mortgage advisor, such as the one that I work with, to make sure that this is the right solution for you, and don't just think that it is, because it might not be based on your personal circumstances. So always, always, always consult a mortgage advisor. And if you want me to put you in touch with one, just let me know. But with that being said, guys, if you like this video, please give it a big thumbs up and also subscribe to my channel down below. It's all free, doesn't cost you anything, but it massively supports my channel and helps me reach a wider audience. So thank you for watching, and I'll see you guys back on Monday with a brand new video. Bye, guys.